Good afternoon. Welcome to ABC 123 Trader. Today is March 28th, 2021. And let's start taking a look at today's video. But before I start, all forms of trading carry a high level of risk, so you should only speculate with money you can afford to lose. You can lose more than your initial deposit and stake. Please ensure your chosen method matches your investment objectives. Familiarize yourself with the risks involved, and if necessary, seek independent advice. And the U.S. government required disclaimer is Commodity Futures Trading Commission. Trading financial instruments of any kind, including options, futures, securities, have large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the options, futures, and stock markets. Do not trade with money you cannot afford to lose. Alrighty, now let's get into it and give you some education for today. Alrighty, guys. Sorry, it's been quite a while since I've been doing a video. I've been kind of on a hiatus, on vacation a little bit, trading a little bit, just doing all of this and some programming. And today, what I really want to address, I guess, I have questions. I always keep on getting emails, some from regulars and different traders ask me all these different questions. As how do you scalp? How do you do this? How do you control your stop losses? Where's the best area to enter? I can't answer all those questions, but I can try to give you an area. What you have to understand is basically it's the structure of the market. I trade the NQ because I like the volatilities and I like the fast moves. But it doesn't really matter what you trade. The bottom line is you have to look at the big picture and you have to look from the top-down approach. And if you looked at my previous live sessions, majority of the time I'll start from a daily bar to 4-hour bar, etc., etc. So what I'm going to show you today is, and the reason why it's so important, and hopefully you might get this aha moment of where to enter and being patient, because the majority of the trades is you can enter a trade, but many times people can't not figure out where a target is or where to exit, what is your risk reward, etc. If you can figure out risk reward, if you can figure out I won't say chickening out, but not trading too often, you can be a very consistent trader. So the very first thing what you have to do, and what I'm going to actually go right even farther back in time. I'm going to go to a monthly chart. Okay? The reason why I want to do a monthly chart is, let's see, since I guess we have the Trump years and we're in the Biden years. Let's start taking a look of how the market has been performing right now. Good afternoon. Welcome to ABC 123 Trader. Today is, I guess, it is April 6th. It's a Tuesday. I haven't talked to you guys in a while, so what I wanted to do is try to hopefully give you a little bit of education, see how the market's been performing, and let's take a look at the phase, and then I just want to show you a couple of indicators, and so you guys don't do, I guess it's called analysis paralysis. That's the easiest way to describe it. But let's start taking a look of how the market's been performing. And what I'm going to do in the beginning, I'm just going to do the swing scanner and see how the market's going. And I'll put it on a 1-hour chart. It's good enough for now. And so basically, if we were on the swing phase, you could tell we're getting close to 5 days left. It's been a really good run. We had impulse 1, impulse 2, impulse 3, and she's starting to tire out here, as you can see. So we'll see if she's going to fade down or play around in the next few days. But as long as you know that if you're trying to figure out what side of the trade or how to think of how to trade, my number one thing I usually always look for is what side of the phase I'm on. I've been on a buy phase. If I kept my head on straight thinking of just buying opportunities, that was 719 points. Okay? Doesn't happen all the time, but more than not, it will continuously follow the phase. We've had some crazy phases, but it broke even. Even this one was good, etc., etc. So that's the first thing I do. And this is what I do to understand how to figure out the markets. Now, since I've done that, get rid of that. And if we're just looking at a plain chart, get rid of all these indicators here. I had some discussions with some people, but what I've been trying to do is I've been working on auto trading strategies, trying to see if they would work or not. But I want to try to keep it as simple as possible for just regular manual trading. If you go as simple as possible, and be as conservative as possible during the day, and sometimes you might not even get a trade, I'll show you maybe 2 or 3 trading strategies. Just as simple as the day trend. What I try to do, I use a day trend. I set it to a 10-minute time frame, and I just use a specific time frame. I'll leave everything off right now, and I'll just hit apply. Okay? And as you can see, I'll keep it on the 1 hour chart for now. You know, you can see that there's buying and selling cases, buying and selling cases, and there's some whip outs and really good trending days, etc., etc. Okay? But the key, what I try to do is when I do get into the trading day, and you know, once they hit, I will try to trade on the white line, the box, or the yellow line. My favorite line is always this yellow line here, because it's the deepest retracement in order for me to trade. Okay? When you have a running day like this, you know you're never ever going to get into this phase, so then I switch to my second trading strategy. This will be my #1 trading strategy, because what you want to do is when the trade is started, has activated, you want to get a retracement and continuation. So let's go to a 5-minute chart, for example, and then look at us today. It turned to a buy phase. Actually, there was a sell phase that activated, and then it just switched over. But on the sell phase, you would have had this opportunity to come down. But because it got canceled out, let's just look at the current trend. It came down, literally touched a line, and that was your trade today. Okay? From, what was the time? 9:45, basically. So if you had just a buy limit order right here, if it hits, you're off to the races. And from point A to point B, possibility of 115 points. That's as simple as possible what I look for. I will look, what I usually do is I'll look at the first line, see if it penetrates really aggressively, then I wait for the second line, see if it penetrates, and then this is the one I always look for. Sometimes I'll omit these, but depending on trending dates. Now if we go back in time, let's go back here, there was no trade here. Day before, no trade. Day before, even no trade. And that's fine. Oh, actually, this was a trade right here. First one, I'll look at the penetration a little bit. This would be at 8 o'clock at night. But there you go. There's your trade. But I will do that day in and day out to see where we are on the phase. Okay? Keep on going. As you can see, you had a lot of opportunities on this one. So basically, where the 10 o'clock bell comes down, just tries to barely touch, and away you go. That would have been my trade here. And what these lines are is 121, 141, 161, 200, and I think 238. So that one trade alone, just being patient enough to get to the line, down, you already have 84 points. So that is one of the simplest, and right here, as you can see again, boom, away you go. Simplest strategies as possible. Line, a line, line in the sand, beautiful one right there, away you go. Touching again, second time. See, we're at 10 o'clock, so one opportunity, second opportunity, away we go. Love it. Okay, now I'm going to turn off this if the day fades. Let's switch this off and go down here. So today was really crazy, kind of whippy, but that's fine. The other thing that I'll do on this trading strategy, if you're getting confused of which side of the trade to be on, hold on, I want to delete it again, is I'm going to go right to the basics. Here's to a fib predictor, okay? Fib predictor was one of my first indicators I created a long time ago. And Will it show now since I'm on live? I'll find out. Just give it a second before it finishes loading. We'll see where it is right now. Might not be able to, because we are at 637. Oh, and then what else? What I should do? Why don't I just go 15 days from now? Let's go back to the indicator. Oh, I'm on an energy chart. That's what I was thinking. Let's go to fit predictor. Okay, let's do that one. There we go. Did today show up? Yeah, perfect. Didn't switch over yet. Okay, so with the fit predictor, what I usually do is in the morning, the one zone I hate trading over and over again, create a rectangle, and I'll say this is my zone of caution right here, between 61.50 and 61. The reason why is it does a lot of chop and a lot of vibration. We do have a lot of whip outs, and as you know, we had actually I'll put the day trend back on in here. That's fine, because this is kind of my go-to trade. So on the day trend, oh yeah, and I will do, let me see again. Yeah, I'll put it back to my 10-minute time frame that I like. Okay, so on my day trend, when it's, even though I'm out of this box, I will always take these trades first, okay? So what will happen is, I will try to look at how the market is, you know, it's performing, if it's a top day, trendy, or whatever. And what I'll try to do is I will try to trade outside of this 1560 zone. You have to be very careful. But once you get going, then I'll start taking my targets. And my first target always, of course, we top the range, but 127 is always my first line in the sand. If I can get to 127, I'm very happy as a trader during the day, because if I do, even though let's pretend this day trend wasn't activated, let's say it was just whatever. If I did get into that trade, I made my 67 points. Really good trade. And it was whippy today. It was just range bound and just playing around. But even during the playing around, we had one opportunity, really good trade opportunity here. Even in these boxes, we have trade opportunities. But that's is what I'll usually do. And let's see if I can go on a fit predictor from the day before. I'll put a 48-hour. Let's do that one. See if it works. See if I can get a previous line in the sand. No, it's not going to work for this example. It's too early in the phase right now. But yeah, that's what I will do. Let me turn this off. Turn off day trend right now. So basically, what I will do is I will use a fit predictor, try to stay out of the box. If it does come to a 161, I'll see if it bounces on the 50 for a continuation, because this 50 zone is very strong. As you can see, look how much chop I don't want to get into. If I break down to one phase, even from this phase to the 100% zone, doesn't look like it's much. If it breaks down, we can get to it about 36 points on either direction. Boom, boom. Okay. Now, another trading strategy I like using. Turn everything off. I'll turn this off for now. I'm going to go into ATR principles. Simple as possible, as is, 5-minute chart. I had no trade for me on my base. I might not even have a trade for it. No, I had one trade that night I wouldn't have taken because I was an up. Basically what I'll do is, if it gets into this red zone or this deep green zone, I will take a trade. That's about it. It has to get within that zone and I'll take it. I might even take 2 contracts at that. I'll show you why, because if you do, this is a trending day, so we have to use some other scopes. There's one opportunity right here. And what I can do is go from here even to the top of the range on one contract. If you do that, get it right on the money, you have 27 points. It doesn't look like much, but when it does hit that super deep retracement, the perfect super deep retracement, see this one you would have to watch out, you might get stopped up and wait and see. Let's say you do take that one, but yeah, you have to race it. What's the time frame on that? 4 o'clock. And that's what I'll do. I'll just do that over and over and over again. And once it does get a deep enough retrace, here's my perfect one right here. Right on the money right here. Well, this bounce happened once, 3 o'clock in the afternoon, go figure again, but that's not the point. Just for example, here you go, off to the races, there you go, you got 95 points. And another opportunity here, that's my time, and away we go, over and over and over. And if it doesn't work on a certain time frame, maybe you just have to go down, let's say for example, a 1 minute chart, or even a 3 minute chart. Actually, I'll try a 3 minute. Let's see if 3 minute will be better. Let's see what a 3 minute will do. So today, 3 minute could have got you into a big trade here. One trade today, early in the day, as you can see, it was all choppy. It would have been at 1 at 5 in the morning. Nothing. Right here, end of the day again. So I guess 3 minute will be a little bit better. Keep the retracement here, 7 a.m. Let's even try 2 minutes. Let's see if we can get even better. But let's see if the rhythms were better at certain times, and then that's what you want to do. Here you go, 7 a.m. right here, boom, off to the races. Here you go again. So it might be, I might have to use it on the 2 minute chart. Here's another one, deep retracement the way you go. Yeah, so that's basically all you have to do. I mean, the longer the time frame, the longer the run, right? So on a 15-minute chart, it might take forever, but if I had that 15-minute chart and I could run it all day, this was your trade, as you can see right away. So right here, this would have been from here to there, because you're 277 points. So, okay, now let's go to one chart I was playing around. And what I want to tell you guys is with a grain of salt, make sure you test it first, but it's been working very well. Especially more on the trending day. You have to watch it on the chop day so you don't get whipped out too much. But what I'm finding out is I have with the tick range. Let me go to the range right here. Say a range for it. As you can see, market bounces up and down, up and down. Okay, that's ugly right there. And when I first created the indicator, the tick range, I'll just put the average tick range in. I had it set as the base parameters of what I thought would be the proper harmonics. Well, I need a data series. Let's see what we use that. I'm going to go 5 days on this one. I'm going to get apply. Let's do it again. I think I didn't add it. Good tick range. Add it. Do I want to keep this one? Yes, I'll just keep everything on for now. Okay, and as you can see on the tick range, market goes up, market goes down. That's actually a nice harmonic for it. It's just when you get into areas of this zone is where you get totally destroyed. Okay, market came up really nice. Market came down really nice. You could have made some really good points on that time. Let's go first thing in the morning where it was kind of all zoomy, all crazy, as you can see right here, and saying, well, how the heck do you trade this? It looks like it's going up. It looks like it's going down. It looks like it's going up. It looks like it's going down. And this is where we get destroyed. But once it trends, it's perfect. So how can we beat this? What I did, I'm going to do another tick range. Add another tick range here. What I'm going to do is I'm going to turn these on. I'm going to turn basically everything off except my mid band. I can keep the squares on. I'm going to switch my range size to 15. And I'll even change... No, I'll leave everything off. Let's see if I'll put this opacity to 30 for now. So you can see it, because this is a video, so you can see it. Is everything else on? Today's display swings. Swings are already there. Alright. Boom. Done and done. Now what you're going to see is one chart, but what I have two mid bands. But my bias on the mid band is this, the first main, okay? It's a slower movement. And when I start seeing this start turning blue, I could probably try to take an opportunity here, maybe. But once they start turning blue together, I know I'm on the right side of the trade. As you can see, you're taking off. First blue, retrace. That's what I always try to teach. Way we go. Hopefully it works. Vibrating, vibrating, and then you're off to the races. And you can use this as your stop. Whatever you feel. Oh, yeah, actually, I'll put it there. Well, that was 21 points. Now she's sitting flat, you know, and it looks like it's not going the right way. And this is going red, blue, first retrace, maybe go for it. No, it's failing. But what you can do is, once you start noticing turning flat and yellow, looking at your times, the 1107, here you go again, deep retracement, blue, away you go, your next impulse move. And then look what happens here. This is the area where I always said we always get destroyed. The nice thing is because this thing is flat for so long, we're waiting for it to break up to the upside or to the downside. And because I use other things such as the 127 extension, the nice thing is once it starts reversing, here's my first red, and here's my retracement on the yellow, away I go. First opportunity, bounces back, but here's my main band, it's still resisting, away we go out to the races. And look at that move. Turning around, early blue, I'm on a deep red, maybe, I don't think so, I wouldn't don't do that trade, but here is my first retracement, come back down, white band, away I go. And now it's blue, blue, super confident, away I go. Back and forth, back and forth. Today is a very whippy day, but it works really well on trend days. And the reason why I looked at it saying, for myself, it works, but it was just these zones when it gets choppy where I was screwing up. And what happens if I put it to a YM chart? Let's go to a YM chart. So look at this one, YM. You would say, what am I trading? What am I trading? What am I trading? First move, boom. Okay, a little bit down. But that's the beauty of it. This is what keeps you out of the ugly trade. As you can see, on the right side of the trend, let's see, where's 9:30 here? Okay, here's 9:30 in the morning. 9:30, vibrating up. We know this was already a blue band on the long trend. On the blue, where we can go. It's 9:47, choppy zones, all vibration. Here we go again. And even on a YM, which is just breaking out, small moves to the mid band to the mid band, again, 121 ticks. Excellent. Other than that, I'm going to just turn off this video. I just want to give you an update on the video of stuff I've been working on. And, oh yeah, one more thing I want to show you is the order block. And then I'll shut it. So what I'm going to do is I'm going to go back to a 5-minute chart here. And I'll turn off these indicators. Those off. I'll put an order block. More hours. I'll change the color to, let's say, crimson. I'll make it really thick. And then I'm going to create another order block of 1 hour. I'll make it, olive drop, and I'll make it about 5 thickness, 1 hour. Boom. Okay, there we go. And so basically what it is when these order blocks are designed, I'm going to be looking for support and resistance. So add more days in here. For order blocks, we need more time. And the reason why is because I'm using 4-hour chart data mining. So here you go. Now we have hopefully a couple months in. As you can see today, or actually it was April 5th, we had an order block. So when this market was coming down, it wants to test this in a way it will pop up again. And as you can see, we broke this level. So when we're breaking this level, and you can see we're tapped up out here. So this is your order block. So we know from point A to point B. If we break down from here, then we can go back down. Let me just try it. Let's put 90 days. I want to see what happens. Oh, I'm on YM, that's why. Okay, so I'll show you on NQ. There you go. So with an NQ order block, see we're right in that zone, and there was a previous order block way up here. So we actually had an opportunity to touch once, vibrated on this order block, 1 hour, vibrated on this one, ultimately reached to the main one and pulled back. And where it pulled back, probably right up to these previous order blocks. So you still can use these. I just wipe it out because there would be hundreds of lines. The one I'm really interested about on order blocks will be the ones that are lined up together right on the center here, and the one below here. When we starts hitting the sell phase. So what we have is on our sell phases, we have a 4-hour order block here, 4-hour order block here, and a 4-hour order block here. Okay, other than that, you guys just take care. Just make sure you pinpoint your trade safe, and you guys have a great day. Okay.